Good morning. The subcommittee will now come to order. I thank everyone for joining us this morning, and I want to especially thank the witnesses who have traveled from across the country to be with us today. On this committee, we are focused on making sure that small businesses, whether in my district in California, in Ranking Member Spano's district in Florida, and in every district across America, can access the capital they need to start, grow, and create new jobs. And we know that when capital is affordable and accessible on reasonable terms, small businesses can do what they do best: strengthen our communities and fuel our economy. This is something I've witnessed firsthand in my home state of California, where 3.9 million small businesses make up 99.8% of our state's business and employ almost half of our workers, making them an essential part of our economy. Though accessing capital affordably and on reasonable terms is a challenge virtually all entrepreneurs face, this is even more difficult for women, minority, and veteran entrepreneurs, as well as small businesses looking to revitalize the rural parts of our country. Recognizing the additional barriers to capital faced by entrepreneurs in these communities, SBA initiated the Community Advantage Loan Program as a pilot in 2011 to meet the credit and technical assistance needs of small firms in underserved markets. The Community Advantage Program provides mission-based lenders, mostly nonprofit financial intermediaries focused on economic development, access to loan guarantees under the General 7A program for loans of $250,000 or less. By utilizing Community Advantage, these lenders fill a gap in the market and help small businesses who face challenges accessing traditional capital to eventually become bankable businesses. A key aspect of the program is that lenders who participate in the program must make 60% of their Community Advantage loans in underserved markets. To access the program, a business must prove credit worthiness and a sound business idea, but unlike traditional lending, qualification for the program is not limited by the size of the borrower's balance sheet or amount of collateral involved. This makes a real difference for businesses that might not otherwise qualify for traditional lending. And so far, the program has been successfully meeting its goal of maximizing the footprint of SBA-backed lending to underserved markets. SBA stated in its congressional budget justification for fiscal year 2019 and that this program reaches, and I quote, significantly more women and minorities than the traditional 7A loan program, unquote. Since it started in 2011, the program has been extended numerous times, but it's currently set to expire in September 2022. That's why I'm proud to be working with the ranking member of the Senate Small Business Committee, Senator Ben Cardin, on bicameral legislation to finally make Community Advantage a permanently authorized SBA loan program under the Small Business Act. Which brings me to the reason we are here today, to hear from Community Advantage lenders and a borrower about the impact that this important program has on underserved communities and about the value this program is adding to our local economies every day. We can all agree that minimizing barriers to affordable access to capital for underserved entrepreneurs is an incredibly important function of this committee. I look forward to working with my colleagues on both sides of the aisle to address the challenges facing our small business owners when it comes to securing capital. Again, I thank the witnesses for being here, and I now yield to the ranking member, Mr. Spano, for his opening statement.
Thank you, Madam Chairwoman. The economy continues to reach new heights, and from historic unemployment rates to encouraging GDP readings, the nation is moving in the right direction. But despite these positive economic signs, the nation's smallest firms continue to face obstacles when it comes to financing their businesses. With conventional lending options exhausted, they often turn to the Small Business Administration and their many capital access programs to finance their operations and their dreams. SBA's largest government guarantee program is the 7A loan program. In 2011, and using its own express authority, SBA created a 7A sub-program targeted at underserved communities called the Community Advantage Loan Program. Given that this program is not congressionally authorized, it's currently operating as a pilot program within SBA and thus lacks the many requirements needed for a government guarantee loan program. Since its creation, this pilot's expiration date has been extended a number of times by SBA and was recently extended until September of 2022. In this last extension, SBA also made significant structural changes to the program to further examine it, which include prohibiting new community advantage lenders from participating to adjusting the loan loss reserve ratio. Ultimately, the decision to authorize this program lies solely with Congress. Small businesses, entrepreneurs, and startups from Ohio to my state of Florida benefit from many of SBA's capital access programs, including the Community Advantage Pilot Loan Program. A comprehensive discussion on next steps for this program is required, and that's what we're doing here today. I want to thank our witnesses who've traveled from across the country to talk with us. Thank you very much for being here. I look forward to hearing about your experience with the program, what's worked, and what has not worked. I'm also interested in hearing how you believe the structural changes that the SBA put in place this past fall will impact the program. As we have these conversations, it's important to keep in mind that with any government program, comprehensive oversight is critical in safeguarding American taxpayer dollars. Thank you, Madam Chairwoman, for having this timely hearing, and I yield back.
Thank you, Mr. Spano. The gentleman yields back. And if there are any committee members that have an opening statement, we would ask that they be submitted for the record. I'd like to take just a minute to explain the timing rules. Each witness gets 5 minutes to testify, and members get 5 minutes for questioning. There is a lighting system to assist you. The green light comes on when you begin, and the yellow light means there is 1 minute remaining. The red light comes on when you're out of time, and we ask that you stay within that time frame to the best of your ability. I'd like to introduce our witnesses now. I'm so proud to welcome our first witness, owner of Tribali Foods and my very own constituent, Miss Angela Mavrides. As a kid in her grandmother's kitchen, Angela discovered the nurturing power of real foods. Today, her organic 100% grass-fed beef and organic 100% free-range chicken patties are a flavorful celebration of simple ingredients. As a holistic nutritionist, Angela's ingredients for good nutrition are simple. Eat real, whole, unprocessed food consisting of high-quality proteins, colorful produce, a bit of fruit, nuts, or seeds, and a healthy dose of good fats. She also believes it's important to consider what foods make her happy. And after 35 years of abstaining from meat, burger patties make Angela very happy. Gathered from nature and seasoned with loving care, Tribali Foods make healthier eating easier for everyone. Tribali Foods creates easy meal options with a commitment to taste, nutrition, and transparent sourcing. Welcome, Ms. Mavrides. Our second witness is Mr. Robert Villarreal. Robert has over 24 years of experience in community economic development and nonprofit management and is the Executive Vice President of Economic Development for CDC Small Business Finance based in Southern California. Here, he's held numerous roles over the last 14 years. Currently, his responsibilities include grant and capital development, strategic partnerships, and government relations. In addition, he is the administrator of 3 separate corporations, including the administrator of the State Loan Guarantee Program and president of the Bankers Small Business CDC of California, which is a CDFI. Prior to his current role, Villarreal led the CDC's Community Lending Program. Under his leadership, the CDC was the #1 SBA Community Advantage lender in the nation. Villarreal is currently a board member of Opportunity Finance Network, the Community California Reinvestment Coalition, the San Diego County Chicano Federation, and a member of Union Bank's CSR Advisory Board. Villarreal is a graduate of UC San Diego with a graduate degree in political science and anthropology, and he has an MA in international political studies from the Monterey Institute of International Studies. Welcome, Mr. Villarreal. And our third witness is Ms. Janie Barrera. Janie Barrera is founding president and CEO of Lift Fund. The organization provides loans and management training to enterprises, from startups to long-established businesses. Lift Fund operates in Alabama, Arkansas, Florida, Georgia, Kentucky, Louisiana, Mississippi, Missouri, New Mexico, Oklahoma, South Carolina, Tennessee, and Texas. Since its inception in 1994, Lift Fund has disbursed more than 21,000 loans, totaling more than $300 million, with an impressive 94% repayment rate. Ms. Barrera has received nationwide recognition for her accomplishments, including the Small Business Administration Financial Services Advocate of the Year, the Minority Enterprise Development Consortium's Corporate Advocate of the Year, and the San Antonio Business Hall of Fame. President Barack Obama appointed her to the President Advisory Council on Financial Capability and has served on the board of directors for the Federal Reserve Bank of Dallas's San Antonio branch. She received a bachelor's degree from Texas A&M University, Corpus Christi, and a master's degree in business administration from the University of the Incarnate Word. Welcome, Ms. Barrera. I would now like to yield to our ranking member, Mr. Spano, to introduce our final witness.
Thank you, Madam Chair. Our next witness is John Kropp. Mr. Kropp is president of Growth Capital Corporation, a certified development company that's been operating for over 35 years in Cleveland, Ohio, and has provided more than $500 million in loans to businesses. Prior to his service at Growth Capital, Mr. Kropp spent time as a certified development company lender and microlender in Pennsylvania, along with time spent at Wells Fargo. In addition to his banking career, Mr. Kropp is a United States Army veteran. I'd like to thank you for your service, Mr. Kropp, and we welcome your participation at today's hearing. Madam Chair.
Ms. Mavridis, you are recognized now for 5 minutes.
Thank you. My name is Angela Mavridis, and I'm the founder of a national CPG, a consumer packaged goods company called Tribali Foods. We are a real foods company serving high-quality, flavorful, and effortless meal solutions. Tribali Foods is also a certified women-owned business. I grew up in the restaurant business as my father owned and operated hamburger fast food drive-thrus in the Pasadena area of Los Angeles. My father came to this country from Greece at the age of 17 to pursue his American dream. He opened his first location in 1952 and realized that dream through the success of his restaurants and real estate investments. He passed away 4 months ago, and I intend to honor his legacy and fulfill my American dream of strong family values, entrepreneurship, and giving back to my community. So at the age of 13 and seeking a healthier way of eating, I became a vegetarian. I was influenced by mainstream media and the marketing messages of the early 80s and 90s, where meat, and specifically saturated fat, were vilified for their perceived health consequences. Fat was feared, and meat was going to clog your arteries and give you plaque buildup. I adhered to a vegetarian diet for 35 years. Fast forward to 4 years ago when I studied nutrition and became a holistic nutritionist. I came to learn that well-sourced, high-quality animal meats provide the nutrient density and health benefits that I lacked in my vegetarian diet. I tried my first organic, 100% grass-fed and finished steak and never looked back. With my new knowledge and perspective, I began to explore opportunities in the sector I knew best, the food business. I drew upon my Greek heritage and culinary background and developed a line of seasoned burger patties and sliders. They are made from organic, ethically sourced, humanely raised animals and are blended with only the freshest herbs, spices, vegetables, and purees to bring out my globally inspired flavors. My products are also gluten, soy, and dairy-free, paleo-certified, and Whole30 approved. They include organic grass-fed and finished beef and free-range turkey and chicken patties. Since founding the company in 2016, I have managed to catapult the brand toward mainstream success with an appearance on the Today Show, several industry awards standards like the Nexty, and retail agreements with Target and Walmart nationally, as well as Whole Foods, Natural Grocers, Central Market, and other independent grocers in the California area. With my expansion and growth came the need to obtain capital to fuel this success. I needed the capital to help finance my next stage. I had momentum, I had brand recognition, I had proven my concept, I had national placement, I just needed a way to finance that next step. Through my networking with other CPG companies, particularly Tara's Way, I became aware of the SBA financing opportunities and the support of women-owned businesses. I was introduced to the SBA Small Business Loan Provider, CDC, Small Business Finance, in 2018 for help. Obtaining the SBA financing through CDC Small Business Finance was a straightforward process with affordable terms and conditions. I remember the day I received that call that I had qualified for the full amount. It was probably one of the most monumental days of my life, as I had multiple purchase orders in front of me and wasn't sure how I was going to fulfill them. The SBA loan came at the most opportune moment to help continue our momentum as a brand. Since then, I've used the Community Advantage Loan to fund production, establish sales and distribution, and implement a strong marketing strategy. We also qualified for the SBA Microloan Program, which enhanced our production by financing all our raw material purchases. At this early stage Tribali was in, funding options were difficult to come by. The timing and importance of our SBA funding cannot be overstated. It jump-started our growth, fueled our expansion. Our products are now distributed in 35 states and enabled us to become a viable business. Our growth will allow us to hire 2 new positions within our organization by year end, with more and hopefully many more to follow. Our projections indicate that we will need additional funding and financing as we expand our product line and distribute to more retailers in geographical areas. We are prepared to take on that financing. I am a strong advocate for the SBA loan program. There are thousands of fledgling business owners who this program was designed for and who would otherwise have limited options to start and grow their business, hire staff, and enhance their communities. My own journey would be markedly different without this program. Without these loans, our success thus far could not have been possible. For that, I am very grateful. I hope you will continue this program for entrepreneurs with the passion and vision to fulfill their American dream. Thank you.
Thank you, Ms. Mavridis. And now, Mr. Villarreal, you are now recognized for 5 minutes.
Good morning, Chairwoman Chu, Ranking Member Spano, and members of the subcommittee. Thank you for convening this hearing to discuss SBA's Community Advantage Program, or CA, a small yet impactful pilot program launched in 2011. The program has effectively increased SBA lending to emerging markets and underserved communities, and we believe should be granted permanency and full program authority within the SBA's flagship 7A program. I'm here today representing CDC Small Business Finance, or CDC, which for 40 years has been an advocate for small businesses. We're located in San Diego, California, and operate in California, Arizona, and Nevada. We deploy the array of SBA products, including the 504, Community Advantage, and SBA Microloan. In fact, we are the largest 504 and Community Advantage lenders in the country. Through these multiple programs, we have provided over $13 billion in capital to small businesses and created over 200,000 jobs. Today, my colleagues will be discussing some of the more technical aspects of Community Advantage. My comments today are focused on purpose and impact of the program. When the CA program was launched in 2011, it was a bold step for the SBA, as for the first time, they extended the administration's 7A program to community-based mission lenders with the goal of assisting small businesses that were not yet bankable, yet needed access to affordable and responsible capital. This was also an acknowledgement that the traditional 7A lending industry was falling short in providing small dollar loans to businesses in underserved communities. After the Great Recession, SBA lending to emerging markets had dropped significantly, and the primary program the SBA had to reach these markets, Community Express, had double-digit losses, and 85% of the production was concentrated with just 3 lenders. The SBA understood that mission lenders were the best suited to meet the capital needs of business populations which are not being met by traditional lenders. Mission lenders have a deep knowledge of their communities and, as an explicit purpose and mission, assist small businesses that are located in underserved areas or are owned by women and minority entrepreneurs. Mission lenders measure success by how their small business clients perform and not by a return to shareholders. So what has been the impact? In regard to our organization, CDC, we have funded 656 community advantage loans for over $91 million. This has resulted in 4,700 jobs supported and a less than 4% charge-off rate. As Chairwoman Chu mentioned, 60% of our lending must go to a target market. We're over 70%. In regards to the industry, over 5,300 loans have been made to small businesses, totaling over $712 million. And as mentioned, 60%, the industry is at 70% of target market. One of the successes of the CA program has been its lending to Black and Latino small businesses, which coincidentally are not designated target markets in the program, although we believe they should be. In fiscal year 2018, 12% of all community advantage loans were to Black-owned businesses and 17% to Latino businesses. Compare this to 7A Express for loans under $250,000, where loans to Black businesses was just 4%, and lending to Latino businesses was 9%. A greater distinctions are seen in loans for startups, which are critical to keep the economy growing. For CDC, over half of our portfolio is comprised of startup businesses as defined by the SBA, which is less than 2 years in business. Further, in fiscal year 18, 44% of our approved loans were to pure startups, meaning the businesses had not opened their doors at the time of application. This leaves community advantage lenders to fill the void in the very important continuum of capital. There are currently 99 active CA lenders across the country, and CA loans have been made in 47 different states. While there is an understanding that community advantage loans are riskier, the cumulative charge-off rate on CA loans through FY18 has been less than 3%. I credit this to the experience of the mission lenders that are seated here today. In closing, I would like to quote from my colleague from Montana, Dave Glacier, who is also a community advantage lender. He notes that as mission lenders, we are double bottom line organizations. Yet the SBA and others continue to focus on just one of the two lines, the 3 to 4% loss rate. Rather, we encourage them, and more importantly, this committee, to focus on the second line, the 97% success rate, and the incredible impact we have had for the 5,300 small businesses in the United States, just like the one seated here to my left. Thank you, and I look forward to your questions.
Thank you, Mr. Villarreal. Ms. Barrera, you are recognized for 5 minutes.
Thank you very much. Good morning, and thank you for the opportunity to speak before you on behalf of Lift Fund and the CDFI community in support of the 7A Community Advantage Program. This year marks our 25th anniversary in fulfilling our vision of opening doors, leveling the financial playing field, and building a community of shared success through entrepreneurship. Since 1994, we have provided 20,000 resilient yet underbanked entrepreneurs with over $300 million in capital, allowing them to build assets and create and retain jobs in their communities. Our loans range from $500 to $500,000. The average loan size is under $25,000. The average FICO score of one of our borrowers is 590, and we have a 96% repayment rate. So we have learned how to mitigate risk. Since we are not a bank and do not have depositors, we have partnered with over 78 banks and credit unions, government loan programs, foundations, and impact investors to access the funds that we need to lend in the community. So unlike our for-profit businesses, in terms of our business model, we as a not-for-profit, our business model is to lose our best customers. The for-profit world wants to keep them. We want them to graduate and go into the traditional banks. So we started in Texas 25 years ago, and now we are in 13 states across the Southeast. We provide capital in some of the most economically segregated communities in our country, including the Mississippi Delta and the colonias along the Texas border. We serve urban cores like New Orleans, Dallas, and Houston, along with areas that have been devastated by natural disasters like in Florida. Since the early 2000s, Lift Fund has worked closely with the U.S. Small Business Administration. First, we started out as an SBA microloan program. Then we expanded to the SBA 504 program in 2008. We operate 2 small business women's centers, and in 2011 became part of the pilot program for the 7A Community Advantage. Our approach is simple yet impactful, coupling mission-driven capital with business and financial education or technical assistance to help business owners. Because of the Community Advantage Program, we have served an additional 260 entrepreneurs, over $33 million through this program. In October 2011, we made one SBA Community Advantage loan at $210. Last year, we made 65 loans totaling $8 million. Because of these loans are guaranteed, we are able to sell them to the secondary market, allowing Lift Fund to have the liquidity to make loans to minority, rural, and veteran business owners. Lift Fund was one of the first recipients of the 7A program in 2011. Since then, we've done 260 loans, resulting in over $33 million. We disperse these to deserving entrepreneurs like Shalina and Rico Nelson, a veteran minority couple in Round Rock, Texas, who wanted to open their own donut shop to provide a meaningful career path for their disabled son. As a startup, the Nelsons were not able to receive funding from their bank and were referred to Lift Fund for support. We provided the Nelsons a $70,000 SBA community loan to do the build-out and open Crack the Dawn Donuts, now in its third year of operation. So these borrowers have created over 1,200 jobs and retained an additional 1,400 new jobs in the communities. The loans that we use in the 7A Community Loan Program are going to diverse communities. 58% are clients of minorities, 35% are women, 18% are veterans and their spouses, and 31% identify themselves as low to moderate income individuals. But over 60% loans are in the low to moderate income level neighborhoods. Our support goes beyond the urban core. Last year, 10% of our lending volume of the 7A program was to businesses in rural areas. Take Anamia Martinez Ortiz, for example, a small business owner in McAllen, Texas. She came to Lift Fund in 2014 with less than a year under her belt as a business owner. She had approached several banks and was turned down. Banks are regulated, and she did not qualify. Lift Fund is able to accept requests from startups and those with lower credit scores. Our underwriting looks at capacity and how they will repay the loan. So she started out with us, and now she has 10 locations throughout the Rio Grande Valley. While our clients may have challenges, our repayment rate has continuously remained at or above 68% in our portfolio. I am proud of the entrepreneurial culture we have developed at Lift Fund. We are responsible stewards of our lending funds, constantly improving our processes and evaluating to meet our clients' need. We created our own risk model and underwriting criteria, and to this day continue to make adjustments on our data. We complement our internal controls with the SBA 7CA tools as well, like the scorecard. At Lift Fund, we take great pride in portfolio quality. Despite our clients' challenges, their repayment rate is high. In 2017, we increased our internal minimum SBA score for a 7A loan from 120 to 140. We did this a full year before the SBA made the same decision. We urge Congress to make the 7A Community Advantage Program permanent and increase the loan amount from $250,000 to $350,000. It is essential to reach those often left behind, minorities, women, and rural communities, and provide a pathway to prosperity for deserving and committed entrepreneurs. I want to personally thank you for the opportunity of speaking, and I appreciate being here. Thank you.
Thank you, Ms. Barrera. Mr. Kropf, you are now recognized for 5 minutes.
Thank you, Chairwoman. Good day, Chairwoman Chu and Ranking Member Spano. I'm John Kropf, President of Growth Capital Corp. In Cleveland, Ohio, a mission-based not-for-profit lender. And I'm here today to share my experience with how Growth Capital is investing in community with our participation in the SBA Community Advantage Program. Back in 2010, I was actually quite astounded to learn that SBA was rolling out what I considered to be an innovative and cost-effective solution to the problem of small businesses, especially those in underserved markets, having access to affordable financing to found, fund, and grow their companies. And expanding the SBA 7A loan program to not-for-profit mission lenders like Growth Capital, Community Advantage linked a vital federal government loan guarantee mechanism to a healthy, market-based, mission-based product delivery platform focused on serving those small businesses, oftentimes neglected by traditional bank lenders or outright exploited by non-traditional predatory lenders. How astonishing it was to see such innovation coming from a federal bureaucracy like SBA. There was no new department created, no new big government program initiated, no new spending required to launch SBA Community Advantage. Instead, we witnessed the confluence of community-focused, impact-driven organizations like CDC Small Business Finance, Lift Fund, and Growth Capital with the community-focused, impact-driven mandate of SBA. We did not initially apply for the participation in the program because of regulatory restrictions. But in 2012, when SBA allowed for the use of loan service providers along with the sale of CA loan guarantees on the secondary market, we jumped right in and were approved to participate, and jump right in we did, having immediate impact on our communities with our CA lending, joining other prestigious industry leaders that have programmed to date lent more than $680 million to over 5,100 small businesses, 70% in underserved markets. Our average size CA loan is only $133,000 and demonstrates our commitment to small dollar lending to small-sized companies. But these numbers mean a lot more. These numbers are actually much more. These numbers have names and faces. They belong to people like my esteemed colleague Bob Vrilla's borrower here today from Ms. Chu's district. They belong to borrowers like mine. Amy Wong of .org Solutions in Akron, Ohio, who testified here before this committee last year on the importance of SBA Community Advantage Program. These names and faces include other such borrowers like Destiny Burns, a retired naval officer who owns Cleveland Urban Winery, or Catherine Green of Sassafras Land Design, or Jake Fitzpatrick, owner of Clifton Cleaners, and Mark Steinberg of Queen City Gutters in Cincinnati, Ohio. Every one of these borrowers, and indeed almost all of our CA borrowers, are what I describe as the just-missed bank loan. Companies that are creditworthy but just miss the bank lending requirements. And many times, these small loan requests miss the bank profitability requirements and are thus neglected by traditional bank lenders. And many of our banking partners make direct referrals to Growth Capital for CA loans. If these companies are not referred to a CA lender, many times they find alternative high-rate lenders and become outright exploited by non-traditional predatory lenders. We ourselves at Growth Capital just received a solicitation last week for an online loan. The rate was 48.7% when I checked online. So, what is needed? There are several important items that I feel are needed and critical to expand our CA lending. One, increase the guarantee percentage. Currently, it's at 75% on loans up to $250,000 and 85% on loans below $150,000. A guarantee of 85% for all CA loans would dramatically help the liquidity of CA lenders throughout the country. CA loans currently require a guarantee of 85% under $150,000 and actually 90% on international term loans. Growth Capital recently closed an international trade loan, and we actually represent 40% of all CA international trade loans dispersed under the program, and that carries a 90% guarantee. We'd like to do more of those. That small company in Cleveland is actually an exporter selling equipment in Saudi Arabia, Egypt, Hungary, and Romania. And our loan of $250,000 required just $25,000 in capital. In closing, while I understand the current political conditions we are under, we CA lenders must currently operate. I understand the true bipartisan approach to supporting small businesses that this committee takes. True bipartisan support is for the CA borrowers previously mentioned, Amy Wong of .org Solutions, Destiny Burns, the retired naval officer, Catherine Green of Sassafras Land Design, Jake Fitzpatrick and Clifton Cleaners, and Mark Stenberg of Queen City Gutters in Cincinnati, Ohio. They actually need more than bipartisan support. They and we CA lenders need tri-partisan support. We need to try. We need to try harder as CA lenders. We need to try more as an industry. We need to advance our community advantage lending and really try to do more investing in community. We will try to recognize the importance of financing underserved small business concerns that is inherent, the risk involved in financing underserved businesses, and the capacity of experienced, mission-oriented lenders to manage risk and build sustainable, bankable businesses through our SBA Community Advantage program. I am confident this committee will support. In conclusion, I wish to personally thank Chairwoman Chu and Ranking Member Spano and all the honorable members of this important committee, and know that we all share the same passion and commitment to investing in community. Thank you all, and I'm happy to participate in fielding your questions. Thank you.
Thank you to all our witnesses. I am truly impressed by your testimony and your commitment to community advantage. And now I will begin by recognizing myself for questions for 5 minutes. So, Ms. Mavrides, thank you for being here today, and congratulations on your hard-earned business success. Can you share with us the state of your business before you received the Community Advantage loan, and how being able to take out a Community Advantage loan made a difference for you in your business planning?
Certainly. The business was self-funded by personal funds of myself, and I presented to the first market, which was Whole Foods, the idea. So they believed in me and gave me up to a year to go and build the brand, build the company, find my sources, and start production. And my personal funds took me that far. And once I had the order in Whole Foods, I got on their shelves and was able to sell into multiple other markets. And at that time, I was borrowing from father, from dad, and repaying, and borrowing again, and repaying. And after that door closed, my next step was to take a line of credit from the bank. But due to my assets, that was not enough. So I became aware of the SBA loan and the CDC lender, and that amount enabled us to fulfill the orders that I had gotten to make us a national brand. I was sitting with Target orders and Walmart and didn't know how to finance them. So once that money came in, we were able to fund the production, make the distribution happen, and secure those sales. So it's helped my brand definitely get to the next phase, and without it, we wouldn't have had money to fulfill those orders.
So you ran out of your personal funds and father funds. Was there any other plan B had there not been the Community Advantage loan?
Right, and raising capital at that time is to do a family and friends round, or to start giving some equity up from your company. Bigger CPG investors were not looking at us because we didn't have at least a $2 million run rate yet. So it was right at that special spot where I had proof of concept, proof of product, but not proof of sales to get, investors. And also at that point, you don't want to start giving up equity of your business. So this was the best choice.
Well, then I'd like to ask all the panelists, you have valued experience with the Community Advantage program with different perspectives as lenders and borrowers. Can you tell us briefly if you would support the Community Advantage program being made permanent? How would permanency help small business in underserved areas?
Chairwoman, like any business, CA lenders are in business. We're operating our own shops. We're private, independent operations. And like any market, like any industry, having the ability to have some level of permanency in the market, to understand that the decisions we make today, we can carry through tomorrow. And without the permanency of the Community Advantage program, there's a lot of uncertainty in the industry and in the marketplace. So we could certainly benefit from that certainty.
And I'd like to add the fact that we, as you heard before in the testimonies, we are the stepping stone into the banks. And so by having a permanent program like this, we can do the things that the banks cannot do, and getting them prepared by reporting back to the credit bureaus their payment history with us. Because that's how we improve our credit scores, is by borrowing money, paying it back on time. and providing that technical assistance. So like I said in the beginning, we're trying to get rid of our best customers and graduate, and so we can be that stepping stone for banks.
I would echo the statements by Janie and John. Two important things that permanency does. One is almost all of us get our capital from banks. And, banks should be and will be reluctant to extend longer-term credit to us if the program is going to expire in 24 or 30 months. So it adds some stability to the program. And also permanency will increase the number of community advantage lenders. As all of us can testify here, jumping into 7A lending as a CA lender is expensive, and it's a commitment of time and resources. And you're not going to do that unless you have some permanency to the program, so that's why it's critical.
Well, I have run out of time, so I would like to now call upon the ranking member, Mr. Spano, for 5 minutes.
Thank you, Madam Chairwoman. Ms. Mavridis, thank you again for being here. I'm just curious how you heard about the SBA and the loan options that were available to you through the SBA.
I actually listened to a podcast from a mentor of mine of how to grow your CPG business, and the name of the company was Tara's Way, and Tara herself was on the podcast talking about the loan. But honestly, had I not heard that, I don't know how I would have become aware of this.
Yeah. Thank you. Ms. Barrera, you had mentioned that that Lift Fund has created your own risk model in terms of assessment of risk. How does that, I guess my question is, how does your risk model different from the traditional risk model? What's the difference, and what has allowed you to be as successful as you have been in this space?
Well, the traditional lenders, as in the banks, have certain criteria that they have to follow because of regulators. Either the OCC, the FDIC, the Federal Reserve, and those are very stringent. They're in the box. You have to fit that box, and if you don't get the loan. At Lift Fund, since we're a not-for-profit, we can look outside the box. We still look at FICO scores, but that's not going to be the reason that we make a loan. We look at capacity of the repayment and so on. And so what's happened since we've been around for 25 years, we've been collecting data of the unbanked and underbanked for 25 years. And I had a real smart intern about 2010 that came in, and I said, create a profile of a good-paying customer and a not-so-good paying customer using SAS. And that's what happened. Eventually, now it's aggregated over all these years that, with AI and so on, we've been able to have our own internal technical algorithm for a scorecard. So, Florida application comes in, it comes into San Antonio, we do the underwriting there through the algorithm, it pops up red, yellow, green. Green, continue the process, red and yellow, loan officer, contact them, why is it red and yellow? Mm-hmm. So that's why we're able to do all these little bitty loans across our footprint and still not making any money because we're not for profit. And we have a lot of folks that we have to handhold through the process as well in terms of getting their financials ready and so on. Mm-hmm. But we've been using technology to be able to provide this pretty good, accurate underwriting scorecard.
Is it fair to say that based on what you just said then that the capacity to repay is really the primary function that you're looking for as opposed
Yes,
to
sir.
payment history?
That's right.
Even though that's a very complicated algorithm that I can't understand and maybe most of us here can't, but that's basically the long.
Basically, that's what it is. And how long they've been living in their place, how long the business and so on. Mm-hmm. But it takes a lot of other things too, because some of them are startups and haven't been in operations, less than a year. Mm-hmm. So it takes in all these other factors.
Mm-hmm. Thank you so much. Mr. Croft, you describe, if you would, for the committee, your institution's working relationship with SBA. What I mean by that is, how often do you interact with them? Describe, if you would, their oversight process of your organization.
Sure. Thank you, Congressman. SBA is our primary regulator. So that's one part of the relationship. SBA has a very stringent regulatory regime for certified development companies as well as CA lenders. So from that standpoint, that's really the beginning of the relationship from a regulatory oversight perspective. But we're also partners, especially with the Community Advantage Program. We're partners in investing in community. So one of those loans that I'd mentioned, Clifton Cleaners. He went to SBA because he couldn't get a loan from the bank. He went to our local district office. They referred him to us. They understand the type of borrower that a Community Advantage can really assist, and they provided that referral to us. We closed the loan just 2 weeks ago. So that's another important relationship. Not just the regulatory oversight, but the partnerships to invest in community, I think, is also very important.
And real quickly, you in your written testimony, you described a relationship with Fifth Third Bank.
Yes.
Can you describe that relationship very quickly, and then the benefit to the...
Yes. Fifth Third Bank provides capital for us to lend for our Community Advantage program. It's very innovative in its approach, where we have a warehouse line of credit that we draw on throughout the year to fund our Community Advantage loans. We sell on the secondary market, vitally important for liquidity. We repay a portion of that line of credit. The unguaranteed portion stays on that line throughout the year. We service interest. At the end of the year, they term it out for us long-term to match our the loans that we have on the books, the Community Advantage loans.
Thank you, Madam Chair.
Thank you. The gentleman's time has expired, but the good news is I believe we will have time for a second round of questions. So now, the gentleman from Tennessee is recognized, Mr. Burchett from Tennessee.
Thank you, ma'am. Thank you, Madam Chairman and Ranking Member. I appreciate all y'all coming up with your testimony. One question I had, Miss, tell me how to say your name, ma'am, Miss Mavridis?
Yes.
All right, I get that. All right, I grew up in Knoxville, and we have a huge Greek community there, and I'm very fond of them. Actually, my daddy was Dean of Student Conduct, and a lot of the Greek merchants, they started nice restaurants, and if I don't know about anywhere else. I think everybody else goes hungry if they don't have a lot of Greek folks in their community, because that's all the restaurants they run, and they're awesome. As a matter of fact, my first traditional Greek meal I ever had was at the Pizza Palace in Knoxville. I always kid about that. It was actually not, it was just pizza, but it was wonderful, and it still is. It's where we go on date night, or when it's my night to cook. So, but anyway, I'm always remembered by the Greek folks because in 1976, my mama had cancer, and Daddy took Mama to Memphis, and there was my brother and sister and I kind of had to fend for ourselves, and the Greek community was so wonderful. They brought by all this wonderful food, and honestly, I never knew if it was for breakfast, lunch, or dinner, or it was a dessert, because they would put the name on it, and of course, it was just delicious. I know I ate baklava for supper every night if I could, so that was wonderful, and it was a great community. But you had mentioned that, you said, and I'm sorry about you losing your daddy as well. I've lost both my parents, and that is a hole that just seems never get filled, so I'm sympathy with you. But you mentioned that your father, you borrowed from him, and then if the SBA had not come along, but you stopped there, what other options would you have had if the SBA hadn't come along?
I think you can do a round for family and friends and put a business deck together where you raise capital from those around you that believe in your concept. And I wasn't at the point yet to get investors in to take equity because I didn't have proof of sales.
Right, you'd have to give them a piece of the action, right?
Right. And no one wants to do that.
No.
At such an early stage in the business.
And an attorney told me, he said, you pay them, do whatever points on the loan, whatever, but never give away your ownership, because that's it, 50% plus one, and you don't own it anymore. So I understand it. Mr. Kropp, in your testimony, you mentioned a Community Advantage International Trade Loan. Can you explain or describe that type of loan? Does it have different terms?
Yes. Thank you, Congressman. The International Trade Loan has been a subset of 7A for many years. It currently carries as an incentive to support exporters. It provides a 90% loan guarantee to the lender. It's been open for banks, been open to bank participation for years through the export assistance centers throughout the country. We have one in Cleveland. But about 4 years ago, we did the first ever Community Advantage loan under the International Trade Loan Program. We were the first ones to do it, and we had to work pretty hard to figure that out. But after we did, SBA surprisingly incorporated the International Trade program terms to community advantage lenders, and we were able to process that recent loan under our own delegated lending authority. So we were able to support that small exporter who exports asphalt equipment to the Middle East and Eastern Europe when he could not obtain a bank loan. If not for this $250,000 community advantage loan, this company would not have been able to make exports and import wealth into our country, and I think that's vitally important, Congressman.
All right. I'll yield back to the chair lady. Thank you so much.
Thank you. The gentleman's time has expired, and the gentleman yields back. Now I recognize myself for 5 minutes for a second round of questioning. Mr. Villarreal, a critical component of the Community Advantage pilot program was to expand the 7A program to mission-based lenders, which are CDFIs, SBA 504 CDCs, and micro lenders. Can you talk more about how mission-based lenders are best situated to meet the needs of small businesses that are in underserved areas or are owned by women and minority business owners?
Certainly. Thank you for the question. I kind of, as I mentioned in my oral testimony, we're all mission-based nonprofit lenders with an explicit purpose to work and serve these communities that we're talking about. So a lot of us are CDFIs, and as a CDFI, over 60% of your lending must be to these underserved target markets. I think the other bonus that we bring that a traditional 7A lender, a bank, cannot do is the business advising and technical assistance. It's a critical piece that I think separates us from a traditional 7A lender. It's something that they can't do and something that they're not modeled to do. And I'll give you an example. We financed a woman minority pottery studio, helped her create her website. She was still doing her books on Excel. Provided her QuickBooks so she could, do her books more professionally, and then we helped her figure out how to best do her pricing. That is something a traditional bank could not do and would not do. So I think that's one of the primary things that separates us and why it's so important that the CA be made permanent. It's not something that a bank can do. It differentiates us in terms of our delivery system. We're a different delivery system, and I think that's the secret sauce within the Community Advantage program.
Thank you for that. And I'd like to ask any or all of the lenders here. I would like to hear more about the work California that our Community Advantage lenders do to reach businesses in underserved markets. I understand that at least 60% of your lender loans must be in an underserved market as defined by SBA. But based on your testimony, all of you target underserved markets very intentionally and did so even before becoming a Community Advantage lender. Can each lender tell us what percentage of your Community Advantage loans are in underserved markets?
Sure, Congresswoman. We're over 70% of our CA lending is to underserved markets. And one of the ways that we reach those markets is we partner with community development corporations throughout the markets we serve. These are community-based organizations that support local businesses in their neighborhoods. We provide the resources for the Community Development Corporation to have that outreach in their neighborhoods. They provide loan referrals to us as a Community Advantage lender. They provide real value in that process, and for that, they earn a small packaging fee that helps support their operations in the local community. So that's been a real good tie for us in being able to reach underserved markets in Cleveland.
Thank you, Congressman. So over 60% of our population is in the low to moderate income level neighborhoods. And we actually in San Antonio, our offices are located in the poorest zip code in San Antonio. So our staff also are out in the communities in those poorest districts, because who qualifies for loans from LIF Fund but people that are underserved? If you have a good credit score, we're not going to accept you as a customer. If you're going to come in, already qualifying for a bank, we're going to send you off. Our mission is to help the underserved become part of our financial mainstream.
The only thing I would add, a couple of things, is we work very well with some of the SBA programs. We think the SBA did a great job when they created Lender Match. Used to be called Link, and they came out as Lender Match. That's been wonderful. We get a lot of leads through that. We work with the women business centers and the small business development companies, the SBDC. So they're great referral sources. And I think the other thing that differentiates us is, for example, we set up our business advising where if a client walked in and they were of the underserved or emerging market and they were quite loan ready, we off-ramp them. It's a term we use, off-ramp them to business advising and got them ready and then put them back into the loan. And last year in fiscal year 18, we did nearly $5 million of loans that way to folks who we would have in the past maybe passed up on or referred out to an SBDC. We worked with them internally and they ended up getting a loan.
Excellent. And I've heard from lenders who would like to see woman-owned and minority-owned businesses, specifically Black, Hispanic, Asian Pacific American, or Native American-owned businesses, added to the list of underserved markets for purposes of community advantage loans. What are the thoughts of any of you on this?
We think that's critical. As I mentioned, some of the numbers in terms of lending to Black businesses, Community Advantage is triple what the SBA express for loans under 250, and it's almost double for Latino. I think for women, Community Advantage is probably 35 to 40%. I'm not sure exactly what it is for 7A. SBA express under 250, but it's probably more than double that. So I think that's critical. It's something that's measured by the SBA under the traditional 7A market. We don't understand why it's not a target market under CA.
Okay. Well, thank you all so very much. This brings us to a close. We want to thank all of you, the witnesses, for taking time out of your schedule to be with us today. SBA's loan program, including the 7A program, is designed to reach borrowers who can't affordably and reasonably access credit from a conventional lender. The Community Advantage takes that important step further by reaching borrowers that even the general 7A program does not reach. As I said in my opening statement, this program reaches significantly more women and minorities than the 7A program. And as we heard today, it is also making a serious impact in our nation's rural communities. Ensuring that this program will be available to future generations of entrepreneurs from underserved communities is a top priority of mine on this committee. I look forward to working to ensure that this program becomes a permanent part of SBA's menu of loan products. Well, I would ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. And if there is no further business to come before the committee, we are adjourned. Thank you.
Thank you.
Oh, good. Likewise. I thought that was interesting. I hope I helped the cause.
Yeah, no, you did great.